Hey everyone, so as you know, I'm going to start doing more of these um, investing videos. I'm sorry, nobody likes to watch them, but everybody should be watching them because this works so well. We all go out and we start thinking about, gee, we want some extra income. So we might go out and, I don't know, open up a bed recycling business. Bed recycling businesses are actually good businesses. They make about $350,000 a year. It's a lot of work hauling beds around, but it's a good business. Or they might go in and start selling Hot Wheels cars. Hot Wheels cars reselling is actually a really, really good business. I did almost $100,000 worth of volume between buying and selling at the peak. It's gotten to be a hard business now because of tariffs and all of those other things. But that's okay. It was still a way to create some extra income. Nothing wrong with that. But if you trade or if you invest, use invest more than trade. By investing, it also gives you some opportunities to make some extra money on the side. If you start paying attention to the market. Now, one of the things that the spreadsheet shows us is opportunities. They're fleeting opportunities. The trend is still lower, but there's these opportunities to be able to step in and make a little bit of extra money on the side. So with your Caterpillar shares, you're out. You've got $10,000 sitting on the side of the road. Okay? You're out of it. You're not in it at all because it triggered red. You got out. And it's going down from 560 to 540. We know it was going down. We can tell you exactly how much it's going to go down by doing the math too. I haven't done that in a video yet. It's very complex, more than what you really even need to know in this spreadsheet. Now, however, there's opportunities that do come up. Notice, if you will, Caterpillar. Notice that we went from 8313 to 8316 yesterday. Let me focus in 8313 to 8316. So this went up. And notice how this printed a 1.0129. Now, the question becomes, what does that even mean? Well, let's look. When we printed 1.0092, what did the stock price do the very next day? It went 573 to 576 and closed at 553. So it reversed. It was working its way down, which is what we expect. This was not exactly that great of a number. Okay? 1.0061 is even less, and this is even less, and this went down. So this should have been more of a short position than a long position, assuming we were going to want to even trade it. Okay? What happened? The stock went 554. It climbed to 561, but closed at 552. It was a good short for a gain of some money, some percentage. Okay? If you were to short the stock in the options market. Now, let's look at this 1.0129. Holy shit, that's a good number. And then look at over here how these numbers were evens. Okay? So that told you that, yes, that today in the market, Caterpillar was going to have an outsized day to the upside, because this is an up volume type of thing. And it was even. Okay? And we were trading the day before, we were trading under its trend. So we were oversold, by definition, oversold. So then we could step into Caterpillar today with our $10,000 that we have for Caterpillar stock, and we could have bought the option. Now, We know that Caterpillar is still in the red. We know the market, the general market is falling apart, but we know that the counter trade is long. Okay? Because it's showing us that. So we could have gone in on the open and we could have done a couple of different things before. And as this was setting up the night before, we could have just bought the stock at 550 something, 553, 555. Who cares? Because we know that the stock's going to go up some tomorrow. So we could have put our $10,000 back in at, I don't know, let's use 554. 10,000 divided by 554. We could have bought 18 shares. Okay. And then our 10,000, we could have said, hey, we want to get out of our $10,000 at some kind of a gain, a 5% gain, let's say. We want to make $500 tomorrow on our $10,000. Okay. So if we bought it at 554 by 5%, we want to sell it at 2770 plus, so 581. Now, that's not going to work. We're asking for too much of a gain. We would have to look into the options market for a 10% gain. We're not asking for that. All we're asking for is we know the market's working against us. We can come in and place some money into Caterpillar because we know Caterpillar is going to have an up day tomorrow, and we could just buy it at the 553 and sell it at the 565. 565 minus 553 is $12 a share divided by 553 is 2.16%. That's not bad. 2.16% in a day just by buying it at the close and selling it at the open seems like a pretty good thing, doesn't it, to you? No, yeah, it's only $216, but it's still $216 that we didn't have any time before. And making $216 on the side is not a bad thing. It's a side job, if you will. Now, we knew that Caterpillar was going to reverse negative because it just isn't a strong market right now. There's other things going on. Everybody's selling right now. Everybody's running for the exit right now. There's no buying coming in. So what did we do? We went 565 on the open and 568 on the total. That was all that we had to play with. So we know that when these set up in red zones, we know we can go long, but we know that we can't be asking for a whole hell of a lot if we're buying the stock. Now, if we're buying the option and we bought the 550 next month out or next week out or 2 weeks out, whatever option we wanted to buy, and we bought it the day before the open, if we caught it at the right time and just said, yeah, we're just going to go buy the option because we believe that because this number is so strong, we believe that Caterpillar will have some kind of an upside tomorrow for some kind of a gain. And then we would have had, so a 550 option going to 565 minus 565 would have a $15 price target. We might have had a 30% gain in the option overnight. Options multiply your gains or your losses. Okay? So then we would have had, let's say, 30% on our 10,000, we would have had a $3,000 gain on the option, just because this said, hey, ding, 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 pay attention to me, please, because it was above 1.075, really, 1.092. I mean, look at 1.092. When it was printed, it didn't do anything. It reversed. But then look at, there's more that you can go and analyze all of this. How do stocks break out or have better price activity one day compared to what they have the next? And that is based upon these columns. Inferences, you can see them set up over and over and over and over and over again, and you can teach yourself over time. I've been looking at this spreadsheet now since I graduated university in 2010. It's now 2025, 15 years of living with this spreadsheet. I know the spreadsheet inside out now. I know what to be expecting. So it makes me a better, if I wanted to trade, I could have stepped in today or stepped in last night on the close and said, oh, I see the signal point. I know that this is going to work. I'll go in for 1.5%, or I'll buy the option for a 10% gain. And I would have hit it. And it was the only stock of all the stocks yesterday, looking at them, that even set up that way. So I knew that there was going to be upside activity in Caterpillar. Now, it's reversed down because the market is selling off hard. But we know that too. So that's all good as well. Thanks for tuning in. Thanks for watching. That's why the spreadsheet is so important, to be able to be a better investor and a better trader. One last thing to share with you. I have a very small account with Charles Schwab in the United States. And the account has some small stocks that I really like. It has some real stock in it. It's got Sana Biotechnology, it's got ProKidney, it's got Navitas, and it's got Riggy in it. Very small account. But what I hate with investing is that when you are a buy and hold person, that account was $2,500. It went up to $4,000, almost $4,100, before the market sold off. And now it's back to $2,500. Why go full tripping? Why go from $2,500 to $2,500? It doesn't make any sense with investing. That's what my point is with investing. My money I have with an S&P 500 index fund, it did the exact same thing. I have $25,000 in an S&P 500 index fund. It went to 26. Guess where it's at now? It's down to under 25,000. Why do that? When it was 26, why wasn't I selling it? Because I seen the market turning it around. And I believe, that's why I believe that the spreadsheet is so frickin'ly important, because then you could have said, hey, I know that there's all this weakness coming into the market. I know that everything's selling off. Let me just get out of my S&P 500 index fund and save that money. I would have had $26,000 in my account instead of $25,000 or $24,900 and something. And I could have used that $1,000 for something else. Could have gone and throw fuel in the pickup truck and hooked up the camper trailer and gone camping for a week or two. Could have done it, used it for something else. That's why this money is so important to use when you have gains, because markets rotate. They just do. They rotate. So capture your gains when you can capture your gains. Use them for something, whether that is possibly another college class, another designation, another whatever. That's how I have so many designations. It's like, oh, I got some extra money. I'm going to go get another designation. I'm going to be that much smarter. Use it to your advantage. Don't let it just go away. Now, last thing as we go into this video, you'll see here this stock. Let's just point this out. Which stock is this? This is Boeing. Boeing. So it broke apart down here October 28th. Okay? That's when it broke apart. We've seen it. Started breaking apart. Got to sell it. Okay? Now, what did it do? 223, 178. That's $45 a share on the breakdown, which was crazy. If you were a Boeing long investor, you lost $45 a share. That's brutal. Just on the downturn. Why do that? That's why it's also important, if you're an investor, pay attention to your stocks, and when they turn red, just exit them. Take your gain that you have and exit it. Use your gain for something else and hold the money until Boeing turns back green again at some point in time. You're going to see it. You're going to know it. It's going to come up. When you've lived with this spreadsheet for as many years as I have, you'll know when to be able to rebuy Boeing or what you're doing with Boeing. Could I have shorted Boeing? Absolutely, yes, I could have. I don't like to short because shorting can crush you like a bug. So just think about, hey, okay, I've got some gains. Let me take my gains. Let me use that money for something else. Let me pay down a car. Let me pay down a house. Let me go on a vacation. Whatever you're doing with it, whatever's important to you, give it to charity, anything. That's why I think it's always important, if you're going to invest, that you also watch what you're doing in some logical way with some kind of a spreadsheet that makes sense to you. That's why the spreadsheet is so valuable. Thanks for tuning in. Thanks for watching. If I can help in any way, 519-995-6145. Have a great day.